Hello and welcome to another episode of Full Court Finance here at Zacks. I'm your host, Ben Rains, and today we're talking about a company that I previewed last week that also went on to blow out Wall Street expectations last Thursday with its Q2 results, and that is yoga apparel powerhouse Lululemon. So before we get into everything that happened late last week and a look ahead at what to expect from the company going forward, I want to say, remember, if you have any questions or episode suggestions, please feel free to shoot us an email over at podcast@zacks.com. Also, make sure to subscribe and leave a review wherever you listen to your podcasts. And a little synopsis before we get into everything, just for those of you who don't know, Lululemon helped kickstart this athleisure apparel, yoga apparel age in the early 2000s that has seen everyone from Nike and Adidas and even Under Armour to The Gap and L Brands, Victoria's Secrets all roll out competing athleisure and yoga apparel offerings, specifically just for a frame of reference, because it seems like Lululemon is still a very young company, and it is relative, especially to companies like Nike and Adidas. The company was originally started in Vancouver, Canada in 1998, and it opened its first standalone store in the year 2000. So, as some of you might know, Lululemon's been on a tear. Its shares reached a new 52-week and all-time high of $204.43 per share on Friday. This is after the stock climbed nearly 9% on the back of way larger than normal trading volume on Friday. And this is after the company, as we alluded to at the top, blew out Q2 estimates. So overall, the company's sales climbed 22% to roughly $883 million. This crushed our estimate, which would have marked 17% growth. So it had 22% growth instead of our estimate, which was calling for 17%. This also beat Q1's top line growth, which was just over 20%, and this came on top of the year ago period's 25% growth. So that's some massive quarter over quarter growth for this company that has been around for a somewhat long time at this period. So it's really impressive that they're still able to grow at 25% when they opened their first store all the way back in 2000. You'd think about this for an even younger company. So overall, Lululemon has now posted 6 straight periods of quarterly sales growth between 20% and 25%. This is great stat because Lululemon's growth before that period had often hovered in the mid-teens. So for over a 3-year stretch prior to Q1 2018, it was on a stretch where every quarter they were growing around 13-14%. So to see this big comeback over the last 6 periods is really, really impressive. And then meanwhile, at the bottom end of the income statement, the firm posted adjusted Q2 earnings of 96 cents per share, which was up 35% from the year ago period. And that also easily topped our Q2 estimates and matched Q1's 35% earnings growth. So those are the simple top and bottom line numbers. And now I want to get into a few more of the details, because at this point, Wall Street and investors are still looking beyond just that core top and bottom line number, which they always should be. But for a company that's trying to expand, they're looking for maybe some more details. So we'll note that their men's revenue grew 35%, and their men's business is something they're really trying to pay attention to and grow in the next several years. So that's actually an improvement from Q1's growth in that segment. Their North American revenues, which is by far their most important region, was up 21%. Digital sales up 31%. International revenue up 34%, which is key going forward. They're trying to grow in Europe and Asia as well. Their combined comp sales were up 17%, which topped Q1. So some really impressive growth in those individual categories. We'll also note that their gross profit was up 23%, and that's a more impressive growth than Q1 as well. So Q2 is looking really strong so far, and that's why obviously investors poured into the stock late last week. And just for a frame of reference, the company now has 460 total stores, and this is up from 455 just last quarter. So In 2000 was their first time they opened their first standalone store. They're now at 460 locations total. We should note that in terms of where their revenue is coming from, they break it down into three basic categories. Around 66% of their revenue is coming from company-operated stores, and then 25% of their revenue is coming from e-commerce revenue, which is up 2% from the year-ago period. So e-commerce is accounting for more of their overall sales. And then what they call other revenue, this includes outlets, which they don't sell much at outlets, temporary locations, kind of like pop-up shops, seasonal stores, and some wholesale accounts, along with license and supply agreements, warehouse sales. So very smaller portion of their business that accounted for roughly 9% of sales. So overall, their big business is still their brick and mortar stores, and then 25% is that e-commerce growth. And now I want to dive into a little bit of what we learned from their Q2 earnings call that goes into what is now going to be the second quarter of their 5-year plan, which, to reiterate, for those of you who didn't listen last week, their 5-year plan aims to grow their overall business in the low double digits annually, grow their men's business by double their men's business completely, and then double their digital business completely over 5 years, quadruple their international business from now until the end of 2023. So men's, digital, international is where they're expecting their largest growth to come from over the next 5 years. And we should note this past quarter, their women's comp growth was 13%, which is really impressive for a business that's been around for so long. Their men's business saw its comps grow 27%. This is driven by, in general, what they just call tops and bottoms. So just anything you'd wear, sweatshirt, running shirt, shorts, sweatpants, something like that, even though they probably wouldn't call them sweatpants. We should also note that the high-end athletic apparel company has jumped into more work-appropriate and casual clothing that you could see in bars or office buildings around the country. And another thing they pointed out on the earnings call is that they're going to roll out some more outerwear offerings. This is as they try to compete a little bit more with Canada Goose and the North Face and some other higher-end outdoor outerwear focused companies. So this is from the CEO, Calvin McDonald, said in the conference call, "Our outerwear continues to represent a meaningful opportunity for us, and we're excited to launch what they're calling a new waterproof wool this fall." They expect those sales to do pretty well this fall on into the winter and going forward. And on top of that, we should note that their European revenue grew by 35%. And as we mentioned just recently, this is key as they're trying to expand outside of North America and Australia and New Zealand, because that's where a majority of their revenue is coming from at this point. And the company highlights some of the stuff that they see as key to their growth there, which is just kind of getting out in the public. So they noted that they hosted several what they call sweat life festivals in some major cities in Europe, including London, over this last quarter. And this is, you buy tickets, you go do workout classes, yoga classes, they host some events, and it's just a way to get integrated into the community, give people a sense of who they are. So this is something they see as key. They do a lot in the United States as well. They're hosting some different running events over the summer and upcoming in the fall as well. Some 10K in San Diego is they're going to be their biggest race, what they say so far going forward. And then on top of that, the company noted that they opened their first what they call mainline store in the Saint-Germain area of Paris. And this is key because companies like Nike use Paris as a huge breeding ground for a lot of their fashion. They take Paris very seriously. They do events for Jordan Brand in the summer there every year. So for Lulu to be able to make it in what is often considered one of the fashion hubs of the world could be very important for the company going forward. They also noted that they rolled out local focused e-commerce websites in both France and Germany for the first time this quarter. And then moving on, in the Asia Pacific region, that total revenue was up 33%. And they noted that their Chinese business continued to grow. It said they had market growth of 68%. They opened 2 new locations in China, in its 4th store in Singapore. They also noted that they're on track. So this is a quote: "We are in the early stages of our growth potential and remain on track to open approximately 15 stores in China this year, almost doubling our store count when compared to the end of 2018. Overall, they said that in China, their e-commerce comps were up 70%, and they also noted that new local market sites in Korea and Japan were really exceeding their initial expectations for growth. Excuse me. And overall, the plan, and this is now moving on beyond just their key international growth, they're continuing, and this is what everyone's trying to do in today's day and age, is really beef up their digital business. This goes beyond just partnerships with Facebook's Instagram and stuff like that, where they're one of the first companies that are a part of this retail program on Instagram. They are increasing their browser and search functionality, and they're rolling out more buy online, pick up at stores, which has become popular at places such as Target and Walmart. And they now say that it's available at nearly what they say all of their stores. And this is up from just 150 at the end of Q1. So they've really rolled out that business relatively quickly. And then another interesting fact is that it seems like they've seen some success on what they called their first truly experiential store. We talked about this last week on the podcast, in Lincoln Park this summer. I've been to the store. It's massive, 20,000 square foot store that has a yoga studio. It's 2 floors. It has a restaurant and a juice bar. And they see these probably as key in some big cities going forward. And so the success of Lincoln Park has seen them. They plan to open their second experiential store. Actually, this seemed like a relatively strange location to me, but we'll see how it goes. Their second experiential store is going to open in the Mall of America in Minneapolis during the 3rd quarter. That's their plan, at least for now. So I thought that was, you'd think maybe they'd open one in Brooklyn or something like that, but the Mall of America, we'll see how that goes. We should also note it that they continue to see some strong results from their membership testing program. Those membership testing cities currently are Austin, Denver, and Edmonton. And this is a quote once again from the earnings call: "As we expected, our loyal guests make up the majority of members so far, but we have a number of members who are signing up for the program with their first purchase with our brands. In addition, we are seeing men connect with us via the program, with over 20% of our members being male in Austin. While we continue to test and learn, we won't get into specifics on the economics of the program yet, but we recently launched our 4th test market in Chicago." So Chicago seems like a big testing ground for the company in general, with that big Lincoln Park location, and now they're the 4th city to roll out this membership testing program. We should also note that the company's, what they say, is seeing strong progress with their self-care business, and this includes dry shampoo, face moisturizer, lip balm, all that kind of stuff. And then I want to quickly mention as well that on top of all of these different events, the company has continued its partnership with Barry's Bootcamp, which is a big, hip, expensive, trendy workout business. It's similar. It's on that same level, you could say, of SoulCycle, which Peloton is trying to go public relatively soon, that they're trying to get some of that market share. So the business of high-end, expensive, workout-focused things is what Lululemon is trying to tap into. Their clothing is expensive. Barry's Bootcamp runs expensive classes for exercise. So they have a partnership with very specific gear, and it's kind of a relationship they're building, and they want to continue that going forward. And now I want to look ahead just to some more of the numbers to give people a sense of what's really going on, and then we'll wrap up with what's... Oh, I just lost this real fast. So if you'll give me a second here, my screen just closed down on me, so I am now just on dead air a little bit, but I'll quickly pull this back up as we're in the middle of this. So get right back to where we were. All right, so we're about to look ahead at the numbers for what to expect going forward. All right, here we go. So sorry about that. I accidentally closed out a screen. So for Q3, which is their current quarter of fiscal 2019, our estimates are calling for over 15% top line growth, 20% bottom line growth. Then we're calling for roughly 13% growth in the fourth quarter on the top line and 15% growth on the bottom line. But the full year estimates give a little bit better of a picture. So for fiscal 2019, we're calling for 15.5% revenue growth on 22.4% earnings growth. And then looking further ahead to fiscal 2020, we're calling for another 15% sales growth on top of that would see the company reach nearly $4.4 billion in total sales. And then we're calling for an additional 19% bottom line growth. And then our earnings estimate revision activity has trended completely upward for fiscal 2019 and 2020 since the company reported its results last Thursday. So some really big positivity on those bottom line estimates heading up in the right direction. And what we should note, and this is really important, the bottom line growth is there, and then this top line growth looks really impressive. So the 15% top line growth that we're calling for this year and next year would come on top of 2018's 24% growth, which was their strongest in a very long time. So this 15% that we're calling for this year and next year would come on top of, this would come in as a far better results. Well, not far better, but better than their 4 years before 2018. So from 2014 through that period, they were doing 13 to 14% top line growth, and this would match 2014's 16% growth, or almost match it. So they're continuing to grow at a really strong pace, which you'd think would slowly slow down as those numbers, as the law of large numbers makes that percentage growth year over year look harder and harder. And then overall, Lululemon stock is one that people might just want to grab at this point and kind of hold on I'm not telling you should buy it, but it seems like it's a company that growth looks like it's going to be here for a while. And if you're in this larger apparel market, they seem to be a company that seems like they have it all together. This stands in pretty heavy contrast to a company like Under Armour. Their growth has also outpaced Nike, which they're obviously at different points in their business. But compared to Nike, Lululemon stock's up 64% in 2019. Nike's up 20%. The apparel market's up 15%. And meanwhile, companies like Macy's and Nordstrom's have really continued to struggle in this Amazon age. But we should also note that, like Lululemon, some other companies, Walmart and Target, have continued to grow as they are able to capture this digital and e-commerce and curbside pickup business, which is also what Lululemon is trying to do. So it's certainly a business and a stock to pay close attention to going forward. And I do believe that right now, I'm going to pull this up, that they are now a Zacks rank number 2 buy. And this is on the back of all of that earnings estimate positivity. Yeah, so they're currently a number 2 buy. The stock was down a little bit in early morning trading on Monday, but this isn't anything crazy as they hit a brand new 52-week and all-time high on Friday. So a little bit of a sell-off people taking some of their winnings, and it currently sports an A grade for growth and an A grade for momentum in our style score system. So it's certainly a stock to consider for all the reasons we've talked about today as they continue to try to grow in all of these different areas. So that does it for this episode of Full Court Finance. Until next time, I'm your host, Ben Rains. And remember, if you have any questions or episode suggestions, please feel free to shoot us an email over at podcast@zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.